fantastic group of guests joining us, and of course, you joining too. We have Kristalina Georgieva from the International Monetary Fund joining us from Washington, D.C., from Saudi Arabia, His Excellency Mohammed Al-Jaddan, the Minister of Finance, Economy and Planning, from Edinburgh, Anne Richards, Chief Executive Officer of Fidelity International, and from Oxford, Cameron Hepburn of the Smith School of Enterprise and Environment. Remember, if you have questions, please put them into the Q&A function of Zoom. Welcome to all of us, but to bring us to a start, I'm going to hand over to Birger Brenda and to chair our meeting.
Thank you, Adrian, and thank you to all of you for again joining us after the summer. We are still struggling with the pandemic. I think we all know that, and we're reminded every day. The economic situation is maybe a little bit less bad than we saw before the summer, but the recovery is really taking time. Why are we doing better? I think the vaccine is now probably more likely to be with us next year. We're getting better at treating COVID patients, and we are also seeing that we're much better at testing. And the world has come together in an unparalleled way to launch stimulus, $11 trillion to build a floor under us, securing that we would not see a meltdown of the global economy. And now the big discussion is, what about the next months? How to use stimulus in also building a sustainable recovery, how to build a better world with the stimulus. And we saw France, as the fifth or sixth largest economy in the world last week, launched a plan, and most of it is for investments and not for consumption. We've also seen that the stimulus has been different when it comes to different countries and regions. If you look, for example, at how much is the stimulus used for enhancing green investments, in the EU plan of $750 billion, 20% goes to the green economy and to renewables, while other large economies are using 1 or 2% on this. So this meeting is really about also, are we using this historic opportunity to build more inclusive, sustainable societies? And as my colleague Adrian said, we have an amazing panel and speakers with us. The first speaker is the Managing Director of IMF, International Monetary Fund, Kristalina Georgieva. And you, Kristalina, were with us when we launched the Great Reset. That's also our theme for our annual meeting in Davos in May next year. And looking now at the stimulus that are put forward, are we really using this great opportunity to build more resilient, green, and socially equitable societies?
Thank you. Thank you very much for continuing on the path of having this discussion. To answer your question, let me start with where we are and where we are headed in the world economy and how that translates into actions countries pursue. Where we are, as you said, we put the floor under the world economy, remarkable actions by governments and central banks. And at that stage, we really didn't have to be differentiating between potentially winners and losers. It is a floor for everyone. Now we are reaching a point when there has to be continuation of support. This is what we say at the IMF: do not withdraw support prematurely, but this support has to be more differentiated in terms of what is it that is the economy of the future demanding from actions today. And in that regard, what we see as promising steps in many places is a triage. One, very forceful support for the health of people so we can put an end to the pandemic and do that universally. Still work to be done in that regard. Two, a lot of attention to what would be the engine of productivity for tomorrow. Let's remember, before this crisis, we did have a worry. The worry was growth was anemic, productivity was low. Is it now possible to inject more a momentum through betting on accelerated digital transformation? And we see a lot of countries and companies paying attention to that. And three, and this third one is very important, we face a very serious risk of a tale of two cities. The part of the economy that is digital and leaning forward does well. The rest does very poorly, and there is no transmission line for workers or businesses to adjust. And the same applies between countries. Countries that have more fiscal capacity, sound the fundamentals, they do well. Others really are in trouble. And I can say that for us at the fund, the attention is on how to inject the commitment to reducing this risk of growing inequality, and how to inject more energy and financing to prevent the other big crisis that we are concerned about, the climate crisis. And there it varies. We have countries that lead and companies that lead, and we want to use our capacity to present to the world where progress is made and where is not, and our capacity to influence financial institutions to accelerate the transition to a greener future. So bottom line, there is good momentum built, but it is not everywhere, and it is not yet to a point of sustainability that can make us all feel like the Great Reset is happening.
No, thank you so much, and you're underlining many dilemmas here. The other day, we were on a discussion together on the fact that 3.7 billion people on our planet are not connected to the web and to the internet, and what kind of opportunities will these people then have to leapfrog in such a situation. But if you look now, Kristalina, at the policies that are available for the policy makers, what is your advice? You saw now, as I mentioned, also the French have in their second stimulus chosen to use more of the money on investments and not so much on consumption. I guess that is along probably with the lines of IMF. But then we have all the emerging economies that we're very worried for, that don't have the same muscles now to launch additional stimulus. So there are many dilemmas here.
Well, the very first thing we tell our membership is that whatever financial capacity they have, they need to really deploy it wisely. And deploy it wisely means to invest in what is going to make economies more resilient. First, people, education, health, social protection, but social protection of the more resilient type, not just making sure that people don't go hungry, but thinking of creating opportunities. In other words, a combination of social safety nets and what I would call social safety ropes. Secondly, making sure that we think of the big dilemma that is coming with accelerated digital transformation, and it is jobs. If you ask public opinion today, unemployment is top of mind concern. So investing in job-rich is luckily also equal to investing in green. In terms of low carbon, climate resilient development, from building insulation to reduce, to improve energy efficiency, to land degradation, dealing with deforestation, building the capacity of our marine environment to sustain us. All of these are activities that are good for green and they're job rich. And the third advice we'd give our membership is when you think of your public finances, put them on the most transparent basis you can, which is move your government to be e-government and make it so that the citizens can be the supervisors of how you use your money. More broadly, we are telling emerging markets that they cannot possibly afford to fall behind in terms of digital transformation. In my old job at the bank, we calculated that sub-Saharan Africa would need about $80 billion to catch up with the internet for everyone, every individual, every business, every government institution. 80 billion on the scale of what we are talking about, the trillions we are talking about, is peanuts. And I think we have to be very determined to make sure that as we move into the next stage, we do so by reducing the risk of this accordion of inequality in the world to open up more wildly. Smart policies today can guarantee that happening. And then we have our own job, which is put our own money where our mouth is. In other words, support programs that take the countries towards growth that is green, smart, and inclusive.
Thank you. I saw also statistics the other day showing that if you invest in renewables, it creates 3 times as many jobs as if you invest the same money in more traditional energy funds. Just one question at the end to you. We are now all discussing the stimulus and parallel, and I think there is a general consensus that we had no alternative. How worried are you medium term about the accumulation of debt? Is that something not to worry about now? Just postpone that worry since we're trying to avoid a depression?
I mean, with interest rates being as low as they are, the inflation expectations being where they are, in other words, low, there is space, and especially for those countries that are in a stronger position to borrow more. This being said, we tell countries, don't rush, but think about medium-term fiscal consolidation and how you're going to go about it. And then we differentiate those countries where debt is already unsustainable. And in these cases, we have to accept that we need to work towards achieving that sustainability, including through restructuring of debt. As you know, very recently, there were 2 countries that have done it, Argentina and Ecuador. And we have to be prepared that there may be more, especially low-income countries in high debt distress that would have to follow this pathway. But if we are to be serious on achieving this level of more sustainable debt in the future, it has to be fueled through more growth and increase in productivity, increase in revenues. So investing in a way in good debt is what we have to do, and not in bad debt being either throwing good money after bad, in projects that are white elephants, projects of the economy of yesterday, or in throwing it into consumption without clear view how you're going to get out of this slippery slope. That sustainability was a worry before the crisis. We now pile up more debt. So, Borge, there is no way but to be concerned about it. And to finish on this, have your thoughts around your growth strategy and your revamping your taxation in the future so you can achieve that objective.
Well, thank you so much, Kristalina Georgieva, Managing Director of the IMF. It's always a pleasure to have you, and we always learn a lot. It is now my honor to go to the Kingdom of Saudi Arabia. Saudi Arabia has the G20 Presidency this year, and one of the leading actors there is the Finance Minister, Mohammed Al-Jadam. He has tried, together with Bretton Woods and others, to also build this floor under the global economy. And thank you, Mohammed, for all you have done there. And it would be very interesting for us to also hear your reaction to what the Managing Director just said, but also what are the policy measures that we have to take to secure a sustainable growth and recovery, and what role will also the G20 under your leadership have now in the last months of this year? Minister.
Thank you very much, Borge, and good afternoon, good evening, or good morning, wherever everyone is. And thank you for organizing this very, actually, helpful dialogue. I enjoyed the Managing Director comments earlier. Kristalina has always been an insightful. I enjoy her comments. And, the only thing I would say, and then I'll respond to your question very quickly, is that I think we globally need to feel the pain of the less fortunate more, whether countries or even communities within the communities. I think we need to do more, and we need to try to come together as much as we can to support these countries and these communities. I think during the crisis, they are the most hurt countries level or segments of communities compared to others. And it is our job at governments, it's our duty and commitment in the G20 to try and resolve this very unfortunate result. I think, as stated, COVID-19 with its severity, spread, and speed shocked the world. And as said, it is possibly the worst that we have seen since the Great Depressions in 1930s. And the pain has been felt all over, at home, with colleagues, with families, at work, economy, governments. So it has not been an easy year for everyone. G20 have responded, and have responded actually very swiftly and very quickly, whether through holding the extraordinary summits in March, whether through the endorsement of the action plan during the April finance ministers meeting, finance ministers and governors meeting in April, where an action plan has been put forward to support the global economy during the COVID-19 crisis and start building through to recovery. G20 have injected, as you have actually mentioned in the introduction comments, I think I have seen the leaflet, which actually is very helpful introduction to this session. $11 trillion has been injected by the G20 alone into the world economy. And as Kristalina said, that with other efforts have actually put a floor to this crisis. The G20 have very quickly responded to the financing gap on the diagnostic, therapeutic, and vaccine and research and development requirements. For years, the health organizations around the world were saying that there is actually a serious financing gap globally. G20 responded and responded swiftly with EU and other stakeholders. The 21 billion pledge was made. A lot of it has already been funded to bridge that gap. But then we still have the future preparedness and response that we need to look at, and we are working through the G20 and with other international organizations to put a plan together based on the commitments of the leaders and their March extraordinary virtual meeting, that the G20 finance ministers and health ministers will need to meet and discuss how we are going to be better prepared for the future. The meeting is scheduled this month, and we will discuss how the world will be better prepared for something like this in the future, with some options that are being put on the table for the ministers when they meet. The G20 have also, for the first time in the G20 history, have published the report and the action plan that is updated regularly and is available on the G20.org website, which basically enhances transparency and communication during these very difficult times. G20 also, for the first time, have endorsed the DSSI, the debt service suspension initiative, where the most vulnerable countries, 73 countries, have benefited from it, with around $14 billion US. That money is redirected to these countries' needs to support their communities, whether in healthcare or social services. The initiative with the G20 continues. We are watching what's happening. We are preparing now a trajectory for recovery, working with international organizations to ensure that the world is better prepared, and the most even relevant and vulnerable segments are prepared. Where in the July meeting of the finance ministers and governors, the enhancements of opportunities for all, many of policy options have been endorsed by the G20, which basically provide a better support for policy makers when it comes to enhancing opportunities for the most vulnerable segments, whether women, youth, or SMEs and others. In addition to all of this, I think on the trade side, in May, the trade ministers have endorsed a statement, a clear statement on enhancing the World Trade Organization, enhancing the value chain resilience, and hopefully that will prepare the world better, God forbid, for something like this to happen. We continue, obviously, to work with the IMF and the World Bank on the debt service suspension initiative to see what is going to happen in terms of extension beyond this year, and how we are going to target it even better, as Kristalina mentioned, for countries that have difficulties with their debt levels, unsustainable debt levels. So we're working towards that, and hopefully by October, when the finance ministers and governors, central bank governors meet, we will have a clear plan for the ministers and governors to decide on the DSSI initiative. So that's basically, in a very brief, condensed timeline, what the G20 have done.
Well, Excellency, thank you so much. Saudi Arabia is also, of course, then a G20 economy, a large economy. And Mohammed, you're also the finance minister of the kingdom. And you heard what also the managing director said about no smart stimulus. Maybe you could shortly share with us how you're thinking, making sure that the money that you are now also using in Saudi Arabia, that it doesn't go to consumption only, but also investments in the transformation that all economies have to go through in the coming years. Are you satisfied with what you have got on the table, and what are your ambitions there? And after that, we'll move on to the other panelists. Minister.
Thank you very much. I think in Saudi Arabia, we were actually very fortunate with the start of 2020. As Kristalina have said, we started, at the global level with cautious optimism. There was a growth, but it was very fragile and a lot of tensions, whether it is in trade and geopolitical. But in Saudi Arabia, we started 2020 on a strong footing. We had a very robust growth in 2019. Vision 2030 started yielding results. We invested heavily in technology for the last 3 years. And, as if we really knew nothing about what is going to happen and how important these investments are going to be in 2020. When the crisis hit, these investments came very handy. Actually, we transitioned from actual to virtual at the private sector, at the government businesses, at the education, at the healthcare services, very, very well and in a seamless way, thanks to the investments that we have made over the last 3 years. And in relation to supporting the economy, initially we used almost a gunshot approach, where basically we provided significant relief and working capital and support to a very wide spectrum of the economy and businesses, including delaying tax collection, including waiving government fees, and also supporting private sector employees' wages, where that actually helped tremendously. After 3 months, we started actually streamlining that support, focusing on strategic sectors, focusing on SMEs with sectors that are very relevant to the new economy. That process is continuing. We extended some of the stimulus packages until end of September, and we are likely to extend some of it beyond that. The economy reopened late June, and the economy actually responded very positively from there until today. We reopened tourism locally because of obviously the still borders are closed largely. The local tourism actually have seen significant jump year on year. We have seen growth about 18%. And food and beverage, we have seen significant growth since we reopened the economy in the last 2 months. And the industrial sector, we have seen actually growth, particularly on import substitutions. And we have seen new investments made by the private sector, particularly on health-related personal protective equipment and related value chain industries. So I would tell you the outlook is actually quite positive. The response from the government side in terms of the debt has been actually very wise. The local debt market have been very deep. We issue 100 billion Saudi riyal more than what we have planned, mostly from the local market. We have seen local markets responding very positively without actually impacting liquidity on the system. Credit to the private sector from the banks have grown over the last 2 months, year on year, compared with this time last year. So the signs are quite positive, but obviously we are not out of the woods yet. I mean, we are very cautious. We are worried about wave 2. We are worried about what's happening in Europe. And we wanted to make sure that we are prepared ourselves. Obviously, Saudi Arabia not only started 2020 with presiding over the G20 with the COVID-19 shock, which obviously had to revise significantly certain parts of our agenda for G20, but also we faced the oil market shock and a significant reduction in our revenues. But because of the strength of our fiscal envelope, we were able to manage that and manage it very well throughout the year. And we are likely to see actually a very healthy growth towards 21. We are likely to end up 2020 with negative growth, but it is going to be on the lower side of the OECD expectations on the G20 members. So I hope, and I'm challenging Kristalina, that we will come quite below what they are expecting in terms of the 2020 negative growth.
Shukran. Thank you so much, Minister. Thank you for joining us. As we all know, there is challenges also ahead of us. We do already see that some countries are faced with more a V-shaped recovery. The Chinese economy is now probably growing this year 1.5%, but then we see some other emerging economies also among G20 that are contracting, for example, second quarter with almost 20%. So then it will take longer time to get back at pre-COVID levels. So I don't think we're out of the woods yet. Hopefully we will see more V's, less U's, no W's or L's, but I think we're also faced with K's. Technology going up, and then we see some of the traditional industry going down. So how to reshape the K into a V. So I think we got enlightened on this with the Managing Director and also His Excellency Finance Minister of Saudi Arabia. I leave then the moderation in your able hands, Adrian. So I think we have a very exciting panel also.
Thank you. And I think we've heard from both the IMF and from government on this topic. And I think it's great to turn to business now and get a perspective from business as to how it sees this issue. And I'm delighted we have Anne Richards from Fidelity International joining us from Edinburgh. And Anne, you know, your business is managing hundreds of billions of dollars worth of assets. What can business do to really move the needle on this sustainable, resilient recovery? Can it go further and faster than perhaps even some countries and governments can go?
I think the short answer to that is yes, that it can. And what we have, I think, seen through this crisis is almost like a concertinaing effect. You've seen time compressed. Things which we thought could take a very long time have happened very, very quickly. And there's sort of two things, I think, that have really focused minds. The first is that realization that the survival of any business is not a given. I think there's always an implicit assumption that any business model can continue in perpetuity. And this crisis has shown that there can be external shocks which put a whole business model, indeed a whole industry business model, into doubt. And that's really shaken up a lot of thinking around about that. But the converse of that is that it's also shown us all, I think, that the radical can be much easier to achieve than we ever imagined it could be. We're all very guilty of proximity bias, of status quo bias. We think where we are and incremental changes rather than great leaps. And yet, if you look at the history of companies, if you look at the history of the S&P 500 or the history of the of the FTSE 100, you can see actually that the companies that are the constituents of that have changed radically over time. So radical happens more often than we think. It's just we are conditioned not to think that we can do it. And I think the thing from this that business can do is grasp the opportunity of reinvention that is being offered to it through this. The fact that we've had tremendously rapid central bank support and tremendously rapid fiscal support from IMF, from governments, from local governments, has meant that business has been given a great opportunity to do that reinvention. And what we have to be very careful about doing is that we do not lose that opportunity, not just to rebuild the past. Rebuilding the past is not going to be an answer to this. This crisis that we're in, the virus that we are fighting, it's not going to be one and done. There's no magic bullet. Great if one turns up, but that shouldn't be your central hypothesis. So we're going to be in a world of waves. We're going to be a world of going forward, moving back a little bit. We have to reinvent business models, and we have to reinvent what the future of work looks like within that. That gives us the opportunity to think about how we build in sustainability and resilience into survivability of those new business models. And resilience and sustainability are completely interlinked. If you're not resilient, you will not be sustainable. If you're not sustainable, you will not be resilient. So I think that's the conversation that business is able to have now and should be having now. And that will take us on the path to building back better, to building back greener, which is, I think, what we're all hoping we can bring as the good out of this very difficult period that we've been through.
One of the bizarre things about this crisis for observers is seeing the number of COVID infections rise, the number of fatalities rise, but also stock markets seemingly rising without taking account of pandemic consequences or really acknowledging this incredible crisis that governments, businesses, and citizens around the world are facing. How confident can we be, given that they're going to be able to price in climate risks and sustainability issues?
Well, I think there's a couple of different things that are going on simultaneously. So if you look at the market, the reaction that we've had since the crisis, clearly a massive injection of effectively zero cost money, very, very cheap money into the system, obviously has an effect on markets. It always has through history, and this time was no different. And you have seen some odd things, like in the States, people taking their check and putting it into the Robinhood account and then going out and putting it on the stock market. Within the stock market, there's been a massive, you mentioned the K effect, there's been a massive gap between the performance of a relatively small number of sectors and stocks against the rest of the market. So quite a lot of the market, I would say, is actually pricing in pretty effectively some tough conditions ahead. But there also has been some faith, I think, from investors that they are willing to give businesses some opportunity. They have been supporting equity raises, they've been supporting bond issuance in order to give businesses the opportunity to do that reshaping and to do that recreation. But nonetheless, I think there is a gap in reality between the two. This appetite to build back better, this appetite to reinvest in building a greener economy, I think is definitely there. We did a survey of our analysts of all of the material stocks that we cover around the world, and that's a lot of them. And there were only 7% of analysts thought that their companies weren't going to be rewarded for investment in greener technology to support a reinvention. So I think you can find some really strong data points to point to the fact that there is appetite to build back better. I think the other thing which has probably helped is that in general, I mean, the data on this is still mixed and the time period is short, but we certainly saw through the downdraft in markets that those companies which scored more highly on a broader mix of ESG metrics, but particularly around the environmental ones, tended to perform a bit better through that downdraft. Too short a data set to say that's absolutely watertight, but nonetheless, I think there is some sense that actually this is an opportunity and that there can be a real economic and financial return from investing in a greener future. And I think that is a change to what we might have seen had we been going through this 10 years ago.
And you mentioned there ESG, that's the environmental, societal, and governance kind of scorecard that can be applied now to businesses. Is that scorecard going to help investors make decisions about where to put their money and help reinforce that more sustainable strategy going forward?
Well, I think what it does in the first instance is it's the increased demand from end clients. And remember, the money that we invest is on behalf of other people. So we need our clients to want to do things with the money they give us to invest in order to provide that pressure. But I think you've definitely seen a little bit of a virtuous circle emerge where there's a clear appetite for more companies that are perceived to be working towards improving those ESG metrics. That has given investors like ourselves the opportunity to have deeper and richer conversations with the businesses that we are having, which are ongoing. There's no doubt that the huge number of different types of ratings, the different taxonomies, the European taxonomy going one direction, the US in another, these things are complex for companies to navigate. And the World Economic Forum is doing some great work with the International Business Council, trying to pull some of these taxonomies together, which I think is great progress. But the building of those metrics together does provide that focal point to allow better conversations, and to have conversations about making investments which might not pay back in the very short term, but which might credibly improve that long-term survivability and thus effectively give a better long-term financial outcome for those investors. So you can see that if we can create this holistic dialogue around this, I think we actually get to a better end point. And I think there is, because of the shock that everyone has been through, with the global pandemic taking us into a completely different whole of world economic shock in a way that we've not really seen for a very, very long time, that has focused minds on how important it is to treat these big systemic threats like climate change as real. And whereas before they were kind of a theoretical thing that might happen sometime in the future. So I think it really has focused minds, and now is a good opportunity to have the conversations and to try and take action on the back of it.
And thanks for that, and stay with us, because you mentioned some of that, and one person who's been studying the impact of stimulus on the environment and on the kind of green agenda is Cameron Hepburn, who's in Oxford. And Cameron, thanks for joining us from Oxford. You were looking, I think, a couple of months ago at some of the early funds that went into building the floor under the global economy, and you looked at it with Nick Stern and Joe Stiglitz. How much of that money that went in early phases was really helping to support that Build Back Better sustainable agenda?
Yeah, I mean, not much in 2 words, because the early phases were about rescuing the economy. It was about sustaining businesses, solvency, livelihoods of people. And in a sense, it was colorless. This was not either a dirty brown support, nor was it green. It was just make sure that people's health and livelihoods is ongoing. So in a sense, the real question is what's happening right now and what's going to happen in the next few months as we think about the recovery side of the story. And here, the priorities for any government really are around jobs, are around investment to create the assets that you need for the future. As Anne said, there's no point pumping money into old, insecure, outdated assets that you just have no place in the future economy. So build out the digital side of things, as Kristalina was referring to, your connectivity, and your sustainable assets. So jobs, the right sort of assets. And of course, we can't have a sensible economic response without thinking about the other crises coming down the line. As Anne notes, really, this has been a wake-up call to all of us that these kind of long tail, unlikely black swan events, they're not actually that unlikely. They are going to happen in a complex, dynamic system. And we're going to get these sorts of shocks on the climate side as well. So we've been looking in real time. We've got a set of trackers and a set of ongoing research looking at these different packages and analyzing them. And right now, the news is not quite as bad as I thought it was going to be. I think we have actually learned something post the last financial crisis, that this is, it's a terrible time, but you can't waste the opportunity to put the economy, send it off in a direction that you want. If I take just one example of spending on hydrogen, it's been fractional, very low, growing at a few percentage points per annum for the last 5 years. And then you suddenly have a massive leap, almost a factor of 100 increase in spending on the hydrogen economy. Now, if that isn't going to deliver change in terms of cost structure, in terms of industry functioning, then I'm not sure what it is. So it's quite a complex picture, Adrian.
Yeah, I mean, it's interesting when you look at the quote unquote opportunity that a crisis like COVID presents for economies and for businesses to really change radically their direction of travel. It's also an incredibly nervous moment for employees, for people in work, particularly looking at the current economic environment and wondering what their future is within it. How do we make that balance between telling people that the economy needs to radically change in order to adapt to these systemic challenges like climate change, and at the same time reassure them that that's not going to be at the cost of their lives, livelihoods, and the very things they want to protect?
Well, I think an important feature of the current moment is that there are an awful lot of people who simply don't have a job. And when you're in that world, there's kind of no better time to start to retrain, to re-educate. And if you're educating somebody now, why skill them up in how to extract coal out of the ground when you could skill them up in how to plant trees or to manage solar installations? So partly it's about this question of how do you manage the incremental shifts in your labor market. And the other thing, as you noted right at the start, there's a multiple of jobs per megawatt hour or per unit of electricity delivered in clean industries than there is in dirty. Whether it's 3 or 2 might be debated, but it's clear that you get the clean industries are more labor intensive. So they're actually going to deliver more jobs that are more secure in the long run. But it's not, it's not all kind of, that doesn't mean that you don't look after some of your older industries. So for instance, the aviation industry has had a series of bailouts. The study that we did across 231 finance ministry officials and central bankers saw that as the most stupid use of public funds. Now, I'm not actually sure that's really correct, because aviation does provide a great service to the economy. But what is correct is that you want the sort of support for that industry to be pointing them in the right future direction. So yes, we'll give you a bailout, but where's the plan for net zero by 2050? And don't tell me it can't be done because Etihad has one, IAG has one, Qantas has one. So, let's just redirect the economy in a reasonable, gradual, well, as quickly as we can, but a gradual way towards building up the asset base and the profitability of the future.
Interesting. I mean, you're not necessarily right now hearing about very radical plans on sustainability. And you said you're picking up some encouraging signs. Are there key things that need to be done in the back half of 2020 that can really help put us on a path that can both tackle the pandemic and meet some of the goals you're talking about?
Yeah, well, I mean, there are a few things emerging actually in the comments to this discussion, which are the Q&A, which I've been watching. So, as you look at the long-run fiscal sustainability of many countries, we currently still subsidize fossil fuels to a larger extent than renewable energy in aggregate, although not per unit of energy delivered. But that's an area that you can look at. I mean, in the shorter term, it's about making sure that you're not building out assets now that you're going to want to retire or strand or scrap, in 10 or 20 years if they've got a 30-year or 40-year lifespan. So that's a key part of the story. And then, as I guess you're pointing to, are there some very critical technologies in this new world that we're going to need? Clean connectivity, this kind of broadband or 5G is very obviously very valuable. We can rethink the transportation industry. And actually, the agricultural industry is going through a process of regeneration too, actually, because there's an awful lot of new technologies emerging into that space that can give you higher productivity from your land and reduce emissions and sequester carbon and provide ecosystem services. And the WEF Nature Action Agenda is looking at what can be done there, and actually there's quite a lot of potential.
Cameron, thank you. I just want to bring the Minister back into the discussion. Minister, you obviously, with the G20 chair, are looking at a lot of the big picture issues that have been raised in this dialogue. And obviously climate keeps coming back as a very important one. Saudi Arabia is obviously on the record saying it wants to redirect its economy to beyond oil, to beyond fossil fuels. How much has this crisis been a call for you and your government to look at perhaps more radical measures than you might have looked at previously in responding to this crisis and looking at some of that agenda?
Thank you. Two things. One, at the G20 level, obviously, climate change is key part of the agenda. And we have actually the ministers of energy and the ministers of environment are working through to ensure that we, adopt the proposed initiatives by the G20 presidency, including carbon circulation, including reducing emission, including renewable energy. In Saudi Arabia, I think what is not known possibly to the world is that we are investing significantly in renewable energy. I think people will be surprised that the number of projects that we have done only in the last 18 months are really significant. We are doing far more renewable energy, whether it is solar or wind, far more than conventional fueled or powered plants. That trajectory is actually growing and growing a lot faster than a lot of countries around the world. We are looking at ways to ensure that fossil fuel emission are reduced even more. I mean, Aramco publishes its numbers, and actually they are one of the best international energy companies when it comes to emission, and they are investing even more in that direction. We have just announced, I think last week or the week before, a very large project, $5 billion project on hydrogen in the north of Saudi Arabia with private investments. So from that direction, I think we are very clear on where we wanted to go. But just let me remind everyone, and I think as you are talking about 3+ billion people around the world not having an internet, these people also will need an energy to utilize the internet. And there are more than 1 billion, 1.4 or 1.5 billion people who doesn't have energy. And therefore, talking about fossil fuel alone is something that we are potentially could be adding insult to injury. I think we should be talking about all different of energy. We should be talking about making sure that whether it is fossil fuel or others, the impact on climate change should be controlled, and we should aim to ensure that we end up with achieving the Paris Agreement and even beyond when it comes to emissions. So in summary, I would tell you that we are taking this very seriously, whether at the G20 or at Saudi Arabia local policy.
Thanks for sharing that. And I think it's interesting to note that you're ramping up your transition to renewables. One of the questions that's come up a lot in the chat is really about fossil fuel subsidies. And Cameron, you mentioned the aviation industry, and of course, aviation fuel is untaxed. And so, are we going to have to be thinking about things like that when it comes to delivering on the kind of agenda that you're looking at?
Yeah, well, I mean, I think it's, pretty much every economist in the world would agree that if you've got something that's causing harms at a social level, then it's ideal that those harms are costed into the product so that you pay the full costs of it. And that's currently not the case with aviation fuels. But equally, the carrot often works as well or better than the stick here. And what the minister said is exactly spot on. It's very, very impressive how Saudi Arabia has put 5, 7, multiple billions into developing this market for molecules, clean molecules, so hydrogen from solar in particular, and then converting that to ammonia for shipping around the world. Now, it's not currently planned to use those clean molecules in the aviation industry. They're going to buses and so on. But you could well envisage a future where we keep flying, but we do so using ammonia or using some synthetic fuel or some other form of net zero fuel. That means this industry has a bright future. And I think it's as much about just opening up our minds in a way, as Anne was saying, you know, things shouldn't be off the table. We're an innovative species. These big discontinuities happen. We shouldn't pretend they don't. And the aviation industry's got a big one coming. So it might as well, you know, grab the bull by the horns and start to think about how it's going to get there.
We need to draw our discussion to a close in a moment, but Anne, I want to come back to you and just ask, how quickly are the investors that you talk to every day willing to move on this agenda? Are they waiting for numbers and waiting for data sets, or are they anxious? Are they telling you they want to move faster?
As ever with these things, there's never any one size fits all, and different people have different things that they care passionately about. But there's no doubt that in aggregate and on average, things are moving far, far more rapidly. And I think from the other end, from the business end, there is a sense of businesses coming to the investor base, coming to investors like us and saying, will you back us if we do? So I am optimistic that the conversations have moved far more in the last 6 months, as I said before, than they have in the last 6 years or more. And I think, you know, trying to keep up that momentum is really what we as investors want the focus to be on. And I know that the World Economic Forum has been really immensely helpful by keeping the lens on this debate, because it all needs to come together at the end of the day.
And one more question coming in from SATIG in the US. How do you see green bonds being used to fund green projects in emerging markets? Very specific one.
I don't know if you want that for me or you want that for Cameron, but I mean, I think green bonds has been.
I was going to ask. I mean, it's been going to put it to both of you.
It's been a great area. We've seen, you know, big increase in issuance. I think there are some doubters out there who are not quite sure that that they are always doing what they intend to do. But it's got a lot of focus, it's got a lot of attention, and as a result there will be more scrutiny, I think, around the characteristics associated with those bonds. So I think it's not the whole story, it's not the whole answer, but I think it is an important part of the answer, because there's clearly capital that is willing to back those bonds if they're structured in the right way and are aimed at the right outcomes.
And Cameron, how do you assess green bonds as a vehicle for delivering change?
I think Anne said it very nicely, to be honest. You know, overall, this is a very good thing to emerge. I'd say, you know, I'm not one who's a complete cheerleader. I think one has to be slightly careful that they do what they say on the tin, and I'm absolutely certain that some of it's repackaging. But that's not to say that the market as a whole isn't valuable. And I think, in fact, this is a very important development, and it's kind of the sorts of scales of mobilization of capital that we're going to start to need. I mean, we're still a long way there, but a long way from being there, but we're getting there. So it's welcome.
We're coming to the end of our hour. I want to say a big thank you to Kristalina Georgieva, to Minister Al-Jadaan for joining and for giving us such an overview from both his G20 perspective and his country perspective, to Anne Richards for offering us her views and also for her contribution to moving forward that ESG agenda with the World Economic Forum's International Business Council. And to Cameron, thank you also for joining and giving us an academic and research perspective on this issue. For all of you listening, I hope you've had a chance to enjoy the discussion, and we look forward to you joining us for the next dialogue in 2 weeks' time. So from Geneva, from Borja, Brenda and myself, and on behalf of all our panel, thank you all very much indeed. Thank you.